Το σελήνινο. Ποιο ήταν η ιδέα του σελήνου, του σκάλου, σίγουρα που θέλανε. Δεν είναι σκάμου.
Good evening, everybody. Once again, we are also live on YouTube.
The hair or the height?
Όχι, δεν έμαθα εγώ, αλλά...
Thank you for coming to the Nicosia Bitcoin Meetup. This is a casual meetup where we're trying to grow the community, specifically in Nicosia, and not just for Bitcoin, although most of us prefer to talk only about Bitcoin. You'll hear about that later. This is a friendly community where we try and have coffee and talk about all things technology, specifically crypto and blockchain. And sometimes we do a presentation. It's kind of like once a year, we're trying to grow the community, make people who are new to crypto be more aware, help them out with some things, but mostly just gather the coffee, talk about crypto. And today we have two presentations, because something very interesting happened recently. If you don't know, your crypto is now being taxed. We're going to find out all about it. And we're going to start the first presentation with Orestis Agathangelou. Oresti?
Thank you.
Just kind of and then you want
Okay. Hello everyone. Welcome to this Bitcoin event, this Bitcoin Meetup. Really grateful for everyone being here. So let's start. My presentation today is called Crypto Exchanges Reporting Your Crypto Trades Basic. My name is Orestis, as it was already mentioned before. I am a lawyer, I have a specialization in technology and innovation, and I also have practical experience with these matters since I'm working in a crypto exchange myself, TD.io. It is a native Cypriot crypto exchange, but let's continue with our presentation. So my presentation today is going to be layered in 3 stages. The first stage is the international one, where we talk about the OECD and its new framework that is called CARF, and how this CARF framework is implementing crypto into the global financial system. For some people are not. Second layer, we're going to be talking about the EU implementation of CARF. So basically how international law is translated into the EU. And last, we're going to talk about Cyprus and the localities of our jurisdiction. And development previously had the CRS, the Common Reporting Standards. This was a system of exchanging information between countries. However, it decided that it needed the CARF, the Crypto Asset Reporting Framework. Why did it need a new framework? Because crypto exists outside the banking system. So the banks are not suitable or adequate to provide that information to tax authorities. Therefore, crypto asset service providers are the ones that have to do the reporting. The goal of this crypto reporting framework is to have global and standardized information. This is pretty much it. And you only do that, excuse me, global and standardized information so that it is consistently and exchanged between jurisdictions. Now, what is CARF? Well, basically, CARF is an identity and residence system. It has a trigger, it's called change of circumstances trigger, where essentially your crypto asset service provider will be sending or making available information of you to your tax authority anywhere you are, even if you change a jurisdiction while you are a client of that crypto asset service provider. For an example, if you are a Dutch citizen, you're living in Netherlands, and you hear about the news that they are going to be taxing unrealized gains from 2027, you might want to move to a jurisdiction like Czech Republic, where they have 0% tax on Bitcoin that is held for over 3 years. When you do so, anyways, your crypto asset service provider is asking you periodically your utility bill, and they will realize that you have moved jurisdictions. Then they will start making available that information to your new jurisdiction, like nothing happened. And this is not only for users that need to self-certify, because CARF is a self-certification system. Users need to provide information about themselves, but it's not just them. Also, crypto asset service providers need to identify themselves to the authorities. We have gotten used to of this loophole that decentralized projects have been using, that they say we're decentralized, we're nowhere, so you cannot regulate us. Well, this is not the case anymore. Even if they don't have a tax residence, even if they're not incorporated anywhere, the CARF asks, where is your regular place of business? So even projects, to bring in more a practical example, MetaMask, which is a decentralized protocol, MetaMask has a company behind it that controls it and develops it. That company is based in Switzerland. Therefore, all trades that happen on MetaMask will be reported to the Swiss tax authority and then communicated to the rest of the authorities globally. But what actually gets reported? Essentially, it is the who when it comes to the user and the where. It's a basic name, an address, a tax residence, a tax identification number, some additional information for corporations, but also your transactions are being reported. There are no minimums on transactions to be notified to the tax authority. Those transactions are split by asset type, so whether it is Bitcoin, it is Ethereum, it is Solana, and then by transaction type, whether it is an acquisition, a disposal, or just a mere transfer. And this happens, and the last thing, they consistently evaluate all of your transactions so that they provide a cohesive financial picture to the tax authorities that can be easily shared between them. And this only happens through standardized data formats. Now let's talk about the timeline of the CARF. It lays down that in 2026, countries are supposed to be collecting data, and in 2027, countries have 9 months together with their tax authorities to make that data available to other jurisdictions. One of those jurisdictions is the EU. However, the EU has a system of exchanging information already. That system is called Directive on Administrative Cooperation. We're going to be calling it DAC for the rest of the presentation. So this DAC essentially mandates that member states cooperate with each other. It lays down rules on exchanging and rules and procedures for exchanging information between governments, but also gives for automatic exchange of information. As we've mentioned before, there was the OECD that has issued the CRS, and now it has created CARF. The CRS has been translated into EU law with the first 7 or 6 amendments of the DAC, and the CARF has been translated into EU law through DAC 8. So the new reporting scheme that CARF has created is also the same as DAC 8, with some differences, of course. So let's talk about the traditional DAC, the first 6 amendments. Basically, all of your income and your ownership of assets has already been digitized and ready to be shared between jurisdictions in the EU, of course, to tax authorities that are relevant to you. So this new system that CARF is introducing is not new per se. It is a dedicated reporting system just for crypto. And this is, as we mentioned before, crypto exists outside the banking system, therefore we need a specialized system just for that. It has similar due diligence for accepting customers, where it differs with the previous amendments, the previous DACs, is that where the traditional reporting of assets, let's say, the reporting of traditional assets is based on accounts and accounting statements, this new DAC 8 is based on transactions. It's a big difference that doesn't really not really relevant for us here now. But if anyone else wants to talk about it later, I would be more than happy. The key shift that is happening here is that crypto has been entrenched within the exchange, the information of exchange in the EU. Essentially what that is, and the innovation of this DAC 8 is that EU is moving away from we just exchange data, and rather it is becoming closer to we operate on a shared database with the same data. It has created a centralized directory of information that all tax authorities have access to. This is something different from the previous DACs. And this makes it much easier for anyone to cooperate between member states and conduct investigations. So, we've mentioned before that provider identity, crypto service providers need to identify themselves. In this regard, all the CARF and the DAC 8 is pretty much the same. Same goes with the user identity, name, address, tax residence, tax identification number. But then we go to crypto activity. What actually gets reported under crypto activity? It is only the aggregates. No single transaction is made available to your tax authority. Essentially, it is money in, money out. How much euros essentially have I put in the system? The units that I have obtained with that amount of euros, and the number of transactions that it took me on an annual basis to reach those totals. The transaction types is basically cash in, cash out, so buying crypto with fiat or selling crypto for fiat. Asset exchange, so swaps between crypto. Merchant accepting crypto as a form of payment, and just sending crypto to unknown external wallets. Okay. worried that it's not going to be showing well. But this is actually a... So let's take the first bullet point, cash in, cash out. So as you can see, cash in, cash out, the upper table is for cash in, and the lower table is for cash out. Bitcoin is the full name of the asset. This is on an annual basis, by the way. The total of euros that the person has spent on buying this particular asset, the amount of units of that asset that he bought with that total amount of euros, and the number of transactions that it took them to reach those two totals. So it could have been 6 transactions of 5 euros, and then just a big transaction at the end of the year. It doesn't really matter. This is how it will show to the tax authority. And the same goes for cash out, the lower table. Total amount of euros that I have taken out of the system, total amount of units sold, how much Bitcoin have I sold to get that euro amount, and the number of transactions that it took me to reach those totals. So what you should know as a user: opt for crypto asset service providers that easily allow you to keep a detailed trade log of all of your transactions. If they don't, that might be a red flag for you. Also, if you're using more than one crypto asset service provider, maintain a log. Maintain a log of all of your transactions, or at least all of your wallets, the movement between wallets, so that you can more easily prove what your accounting reality, let's say. And last, keep a cost basis, basically an average price, buy price, or an average selling price for your investments and selling thereof. And I want to spend the last couple of slides about Cyprus. As you may already know, Cyprus has not yet adopted DAC 8. In reality, that doesn't really make a lot of difference for us here. The obligations are clear, the EU direction is super clear with the central directory, so we might as well start preparing for in the evolving environment. The engine has been made, it just hasn't been imported. And for those who are wondering why Cyprus hasn't implemented this latest amendment yet, this is an official document. It's a commitment to employ the latest, the CARF basically. And within that, Cyprus has committed itself to make the first data exchange in 2028. This is my personal opinion, an informed guess, I guess. If Cyprus is making its first exchange of information in 2028, that implies that it's going to start collecting information beginning 2027. And the silver lining is this: it doesn't really matter that Cyprus hasn't adopted DAC yet, DAC 8 yet, because most of you are probably using exchanges that are not licensed in Cyprus, like Coinbase, Binance, the big ones at least, that have the most market share. And those are probably under these rules already. So they're probably your transactions, even though not in Cyprus, they wouldn't be collected in Cyprus, in other jurisdictions where you're a client at, they will be reported and made available to tax authorities within the EU. And with this, I want to thank you for listening to me for this 10 minutes.
Thank you, Orestis. That was really fantastic, very, very informative, very, very useful. And very important clarity that you said, despite not being implemented in Cyprus, we are probably all already being reported, because as of 1st of January 2026, all of our transactions will be reported, regardless or not if we are Cypriot citizens, as long as we're using a centralized exchange that is actually part of the DAC 8.
Maybe you're one of the lucky ones that has a crypto as a service provider that is one of the rest of the countries that hasn't implemented that yet, but that's niche.
Or I use a DEX, which is quite interesting. So that being said, our next presentation, by the way, what we're going to do is, we're going to do the presentations back to back. So keep in mind all those really, really cool questions you had. After both presentations, we'll sit them down and then we'll do a Q&A. So keep those questions in mind. And what I do want to ask though, since this is actually turning out to a great turnout, there's free pizza. Like I said, this is my job here. Let's go. And I would like to know by a raise of hands, if anyone is fasting or is vegan, raise your hands now, or be forced to eat both cheese and meat. Fasting or vegans? Fasting or vegans. So one pizza will be fasting vegan, the others will have, and just as a personal question, with cheese or with plant-based cheese?
I don't need any pizza.
No pizza. Normal cheese. So vegetarian, and okay, that's what I wanted to know. Thank you very much. And now another presentation. Now we're going to have Mario Souroullas, who's going to focus on corporations and how they're taxed. I find this topic very, very interesting. Mario, thank you so much.
Hello, good evening everyone. I'm Marius. I work for a company called KENDRIS. It's a multi-family office business, and we have a very long history of dealing with private clients and their assets. And the asset class of crypto has recently become a lot more interesting to a lot more people, mainly because of it's a lucrative asset, but also it's very interesting. But then Cyprus came up with a tax which is also combined with our international financial reporting standards, and things get quite complicated. So we heard from Orestis, as a quick recap, thank you for that, Orestis. We heard that we have this CARF and transactions will get reported. There is also a common reporting standard called CRS 2.0, where all your crypto valuations will get reported. He has advised you to pay attention, to find providers who keep detailed logs, and he has told you to do that. And all of this is very valid advice because it is coming up. I don't know if CARF will come up in 2027 or if it will already be reportable in 26 for Cyprus, because the European Commission has issued infringement procedures on Cyprus and all the various other countries presented earlier. So not to get stuck on that, but really assume that transactions get reported in 2026 for the first time in 27. I think that's fair enough. Okay? So what did Cyprus do? Cyprus introduced, sorry, I walk around quite a lot. Cyprus introduced tax, and they said it's flat 8%, and so they came up with this, which we are not reading because this is a joke. It is a very long text. It's actually, it should be much longer, but it doesn't really clarify, and any of the questions that come up are very valid. So I'm just going to skip it and then we go straight into the presentation. So what are the headlines? According to this new article that Cyprus introduced in income tax law, you will get 8%, there's a point, you will get 8% flat tax on your crypto profits, right? This is effective from the 1st of January 2026, so we are already kind of 2 months in 26. The scope is for disposals. So if you have sold crypto between 1st of January 26 and today, this affects you. What does it mean to dispose? We will see on another slide. And cost, I guess, is very interesting to everybody. How do you calculate your cost? Because that is how you get taxed. You have the various accounting options, which we will go through. Then we have, who does it apply to? all Cyprus tax resident individuals and companies, including non-domiciled tax residents. So people who have moved into Cyprus and have come with crypto on their bodies in a USB or on an exchange, or companies that have crypto on their balance sheets, they are subject to this 8% tax. Definition, it's according to this directive, the market in crypto assets, which we will look at in more detail. So it defines crypto assets based on a regulation of the EU, which many of you might question, but it's there. Losses, if you have a loss, you have to either set it off against same year profits of the same taxable person or lose them. So if you generate a tax loss, you should have a good profit to set it off against in the same year. It affects individuals. Individuals are now kind of in a better situation. Arguably, if they never reported crypto profits, they were in a much better position. But if they do report, they will pay 8% instead of the brackets of 20 to 35% income tax on what they make. And companies get clarity on tax rules and access to double taxation treaties. So some of you may have companies, some of you may hold it as individuals. This is relevant for all of you anyway. So what is a crypto asset? It is a digital representation of a value, blah, blah, that can be transferred or stored electronically. Very EU definition, right? So what does this really mean? It means that whatever gets caught by this definition is taxed at 8%, right? Whatever is not caught by this definition is taxed under other rules, so income tax or corporate tax rules. What are crypto assets? Some examples, I'm sure you all know the Bitcoin, the Ether, the utility tokens, e-money tokens like stable coins, NFTs, asset reference tokens and governance tokens, and derivatives are included there on purpose because sometimes they might be crypto assets and sometimes they might not be, which is quite interesting in a sense that it can't be completely tax-free if it's not. What are not crypto assets? For these I've included some descriptions. So you have tokenized shares, tokenized bank deposits, a few other things that come up as there's NFTs are presented twice. That's a mistake on my part. Okay. So really, anything that is a share that is tokenized cannot meet this definition. That's the idea. Okay. So what does this mean? It meets another definition. Is it taxed? Question mark. We don't know. Okay. Okay. So what is a disposal? There are 4 types described in that law, which I showed you earlier. There is a sale, a donation, a crypto to crypto conversion, or if you use it as a payment means. So, for example, if you sold it to get euros on an exchange, and you had bought 1 BTC for 40,000 euros in 25, and you sold it for 60,000 euros in 26. How much profit did you make? 20K, right? In each case, whether you sell it, donate, convert, or use it as a payment, you would pay 8% on the 20K. That's only 1,600 euros. It's actually one of the lowest tax rates in many of the EU countries and generally, let's say, the developed economies. So the big question mark here that I'm sure everybody is wondering, what if I made many purchases and sales over the years, right? So we are in 2026. How do I calculate my cost for those purchases? So you have to keep track of cost, as Orestis very rightly said. You need to find a good exchange with a detailed log, and obviously one that keeps historic records. Most of them disappear after 2 years, some of them even after 1 year. So what do? It's one of my questions as well. If you cannot keep track of cost, but for simplicity, right? We will say that a Cyprus tax resident made the following transactions. company or individual, doesn't matter. You bought one Bitcoin in 2025 for 40K, you bought another one for 50, and you sold one for 100. All of this happened in 2025. And then in 26, you sold another one for 60, right? Can anybody guess what the cost of the Bitcoin is, so you can calculate the profit in 2026? Accountants in the room.
5 for life.
Ah, Roman. Question. What do you think? Okay. So there's various versions. So you have to keep track of cost. You cannot do this if you don't keep track of cost. So how do you do it? If you account for your crypto as inventories under the financial reporting standards in Cyprus, which are international financial reporting standards, which means you frequently buy and sell, or you do not hold for the long run, so you hold for trading, right? If you sold it under a first in, first out, so the first Bitcoin I bought was 40,000, second one was 50, and then I sold the first one for 100, so I am selling the second one now for 60, yes? If I sold the first one, I made 60 minus 50, 10,000. How do you know if you sold the first one or the last one or whatever? It's an accounting policy. This is where it gets confusing. So that's why we have nice examples, I hope, on the slide. In an average cost situation, so if you take the total of what you bought over the years and you average it, in 25 you bought 40 plus 50 plus 100, total of 190 divide by, total 40 plus 50, 90 divided by 2 at cost of 45. In the second one, in average cost, you have a profit of 15,000. Okay? And in the last version, you have the last in, first out. This, I put an asterisk next to it because it is only available to commodity broker traders. You have to, in theory, to be allowed to apply this, you have to be able to trade, which probably means you need a license. If you're applying it, you probably have a license, so you're an exchange. You're allowed to sell your last one and make a profit out of the last one you sold. In this case, we have, if you use the first one, 10,000 profit. If you use the second one, 15. And in the third one, 20. And then you have tax paid at each case. So in this case, it is not beneficial for this taxpayer to use last in, first out. How do you know? You keep a detailed track of cost, like Orestis said, and you have your data and your evidence somewhere to back it up. So your cost determines your profit. What about expenses? Good question. We are not allowed to deduct any expenses here. So the 8% is flat on the profit you make, but you are not allowed to deduct expenses. At least it has not been clarified by the tax authorities in this very short memo they did of a law about this. So what about intangibles, right? This is another way to account for your crypto. In short, this is like an intellectual property right. It is allowed under international financial reporting standards, and this is where you do not hold something for trading. So you hold crypto for the long-term appreciation, and sometimes you sell it. Even if you account for it under a cost model or a revaluation model, you still use first in, first out. So under one model, you have a couple of options. Under the other model, there is only one option. Again, keep detailed evidence. This is the message of cost. I don't want you to become cost accountants here. I just want you to appreciate the message here about cost. Now, mined crypto is taxed differently. If you have mined a certain crypto asset, you do not tax it under the 8% tax regime. You only tax it under either the 15% corporate tax for companies, or 20 to 35% for individuals. Now, the good news about mined crypto is you have, after mining costs, a profit. So let's say you mined Bitcoin back in the days, right? From a block. Your cost for accounting is your market value on the day it was mined, minus your mining expenses. So let's say, for example, you had a cost of 50, so the fair market value of Bitcoin was 50, and your mining expenses was 30,000. This is your electricity cost, things like that. You have a profit of, a cost, sorry, of 20, and when you sell it for 60, you have a profit of 40. Now this gets taxed either at the corporate tax rate or at the individual tax rate. At the corporate tax rate, you can use your mining costs, other expenses to deduct from your profits, but also you have access to what is called the notional interest deduction if you have financed the company through equity. This is a bit more advanced, maybe some of you know, but for those of you who don't, just ask me after, I'm happy to explain. So what happens to your tax losses? I can take a short break, by the way. If anybody has questions, feel free to jump in. Roman.
I mean, if you mine Bitcoin, you pay taxes on the mined Bitcoin, but once you sell the Bitcoin, you also pay the 8%, right?
On the mined Bitcoin, you are gathering your mining expenses, which as soon as it's mined, you can include in the cost of that Bitcoin. So if for example, the market value of the Bitcoin when it's mined is 50, and you had mining expenses of 30 up to that date, if you keep a detailed track record of your costs and expenses, you can actually set it off and make that argument in a tax.
No, yeah, but that's if for example in one tax period I mined the Bitcoin but I didn't sell it, then in the next tax period when I do sell it, do I also pay the?
Good question for the tax authorities, right? So you keep a detailed track record, and then can you use that track record? Of course you can, and you should be able to make your arguments, but I don't have enough information based on a single slide of a legislation, because that's it. That's what we have to go off of.
And the connected question is, if I get paid
Yes.
in digital assets, in stable coins, is that subject to the 8%?
In 2026, if you get paid, you get let's say it's Bitcoin, you get the Bitcoin in your wallet, and then you keep it, and that is your cost of acquiring it. You pay personal income tax on your income, if that is your income, but you don't pay crypto tax until you actually sell it. So if you use the Bitcoin as a means of payment, you have to pay tax then. Stable coins are covered as crypto assets.
Oh yeah, so if I get like 100 USDC,
Yes?
then I pay 2026, and I don't dispose of them.
Mhm.
Then I pay only like the income tax on the value of the USDC I receive, right?
Yes.
Once I sell the USDC,
Yes.
what is the cost basis? The
Well,
cost at which
The cost at which it came into your account. So for everybody who wants to hear the question better, so if I get paid in USDC, which is a stable coin, and it is in exchange for services that I have done, do I pay tax immediately? Crypto tax? No. You pay tax when you use it to pay somebody else, and you will pay tax on the difference. And the thing is, stable coins are not supposed to have a difference. Right? So the only difference you will have is euro to USDC.
Yes, so he can get penalized if the USD rate went up.
Yes,
While if he was paid in US dollar, he wouldn't get penalized.
exactly. Because it's not a currency, it's a cryptocurrency. So if you,
I think that's the issue that they didn't look at here, that it's financial instrument. And in tax, financial instruments don't get taxed. But the capital gain.
There's
Like
a very
capital
interesting
gains.
debate about it because it's actually accounting language, right? So what is a financial instrument? It has to give you access to contractual cash flows for economic benefits to flow to you and so on. This is not a contractual cash flow. This is not an economic benefit. It is in their eyes, in the international accounting standards eyes, an asset that is either inventory or intangible assets. I agree with you. It automatically means that you are penalized with tax because of exchange rates or whatever it is.
When I
Who was
pay,
first? Who is first?
No, what I
There's a
said.
few questions. Go.
you said that me as a company receiving the Bitcoin have to pay tax when I sell the Bitcoin, correct? The 8%, yes.
Yes.
Okay. But
On the profit, right? So
your tax on the 20K, 8% on the 30K.
when you sell it.
When you said yes.
Yes. When I sell it. Yes.
Okay. But I bought it, let's say at 5K.
Mhm.
Don't I have to pay tax that I paid you?
Of course.
I have
Because-
to pay tax also, and you have to pay tax also?
Yes. The thing is, this is
Everybody pays a tax.
everybody pays tax. At this point, this is the message, because you see, this is what the tax office tried to catch, right? That you are not allowed, let's say, to gift Orestis a Bitcoin without you having to pass the market value of Bitcoin to Orestis, so that he starts from that market value as his tax base. So if you bought it at 40, and when you transferred it to Orestis, it was 60, you made a profit of 20. You will say, I gifted it to him. Here it is a gift or a donation. You will say, I didn't get anything in exchange. Tax office will not care. They will say you made a difference of 20. He starts from 60. You started at 40, you made a profit of 20 when you went to 60. So they are trying to catch out the whole thing.
Does it count the opposite way as well? So the same example we used, 100K per Bitcoin, I paid you, and now it's 80.
And I sell it.
And you say
We will
that
look at tax losses.
Ah, okay.
It's not as fun, but yes, it's, because it doesn't work as well.
Okay.
Coco, please.
It's a bit of a different question, so I believe it's better to
Okay,
ask it in the end.
we can do it. We can do it. Michalis?
Yes, I just want to comment on what's your name?
Roman.
Roman. On Roman's first question, I believe, can you go to the mining slide? Yeah, so the income, I believe, cannot be taxed twice, so it's going to be taxed only once. So in this case, in the first case, the mining, the company was going to pay 50% tax on the profit you have on mining, and then you can get as a dividend. So depending on what your tax status at personal level, you're going to pay a dividend tax, or if you are not done, there's no tax. So you cannot pay also 15% corporation tax, and then so with the profit of 20, you can whatever buy a car. At that point, you realize it and you pay the tax 15%. So you're not going to pay an additional tax.
May I actually ask why we pay 15%? So, for example, I do the mining business, right? So I mine 1 Bitcoin.
So you have a profit.
No, I don't have a profit. I have a Bitcoin. It's not legal. It's not money.
You don't-
sell
you-
it.
sorry,
Until I
until
sell
you
it.
sell
It's not. I didn't get the
I
profit. I got a
agree.
Bitcoin.
No,
Why are you
but
saying-
sorry, you don't pay tax when you mine it. You pay tax when you sell it.
Exactly, and I pay 8%. Second rule. So why 15% comes?
When did you pay the 8%? So you're mining it, right?
For example,
You have
so I mine,
expenses.
why
And then somehow it comes to you 50K, right? Because it's the value of Bitcoin. Let's say you get not today, but let's say you got 50K. That was the market value of Bitcoin on that day. You don't pay tax on that. You pay tax when you sell it on the cost base of 20.
So you're saying we're paying both corporate tax and 8% tax on the sale of Bitcoin?
No, it's
So both-
It's very likely to become
But
double.
wait. If it's 50K and I sell it at 50K,
Yes,
I pay 8%?
you
No.
pay 15
15, not
because
8.
you mined it.
Yes.
Yes.
Okay. Okay, that's it.
Maybe just clarifying, because you started the slide very well, and I think the confusion is, you're paying tax on your gains, not on the value mined. The difference between when you mined it at its value and the difference of price as when you sold it, if you gained, you get taxed on that, and the amount of tax is the different category.
They tax the disposal. They tax the disposal.
15% and then the bracket of profit increases 8%. Okay.
They tax the disposal. So when you are mining it, right, you keep track of your cost, your mining costs, and the market value of the Bitcoin on the day you acquire it, when it's mined, right? So if the market value is 50 and you had expenses of 30, you calculate the cost at 20. That's the first part here. You only make a profit when you sell it. This is why I put 40,000. We are assuming it's the same example as before. You sell it for 60. But there is no clarity there on whether when you get the 50, because you mined it, you would pay tax in the same year at 15%.
Now I understand. I can guarantee with this legislation there will be 0 companies doing mining business that are registered in Cyprus. So, because that's insane.
Please, question, Sophia.
Where does state
Nowhere.
one? And then second question, what about inheritance?
It's a gift.
So it's a gift, it's considered.
It's a gift, but this is where it gets complicated, because technically there's no inheritance tax on anything in Cyprus. We don't have inheritance tax. So it wouldn't make sense that you have 8% on the profit of Bitcoin or whatever when it is inherited by the next generation. But it's clear that if you donate or gift, you have that. It doesn't say if you inherit. So I just say, I don't know. And for the staking income, the law is completely silent on staking or any other types of income for that.
You're receiving in Cyprus on base
It's
value.
not money, it's not problem.
Kyriakos?
So I have 2 questions. And, let's do the same thing first. So if I'm doing a donation, so if I make the donation, then that itself is tax exempt, right?
Mm-hmm.
So I can write it off on taxes. So I might be paying 15%, but the entire thing becomes tax exempt, right?
If you donate, let's say you transfer it into a company.
One Bitcoin, you acquired it at 40K, so you donated it at 60K.
Yes.
You have to pay 15% tax, depending on your situation, on the 20% gain, on the 20K gain. But since you donated 60K, the entire thing is tax deductible, right? I don't know how it is in
No,
Cyprus.
there's no.
In
You're
another country,
thinking US. There is no tax deduction in Cyprus for
Donations, there's
donation.
no tax deduction.
No, unless it's to an approved institution, there's about 25.
Okay, so we all have to find like an approval right now, so we can donate the tax and we can do.
Yep.
And the other question is, what about like all the Bitcoin that you have sitting there around for a few years now? You don't know the cost basis, it's somewhere in the wallet, and now you want to sell it. What's the cost basis for that? What do they?
Very good question. It's one of the challenges of implementing this legislation.
On that, you may have one Bitcoin that has been there for 10 years.
Mm-hmm.
Through those 10 years, you probably made some trades and made millions of dollars, to exaggerate.
Mm-hmm.
If you're going to sell the Bitcoin now, you're not going to take into consideration the losses you made all those years back, right?
That is another point on the challenges. I knew these questions would come up. I put them up as challenges. I know. I like this because this is the point that I also went through this thought process, and we all have questions, and there should be questions put forward to the tax office because you have to do a declaration by the end of 26, right? Okay, it's going to be sometime in 27, but you still have to get your affairs in order, prepared.
Gather all the questions, give
There
me,
is,
give it.
I will ask
We'll get that.
Athos for his question.
Most of my questions were already answered, but I will pose this question because I'm not sure is it clear that all Bitcoin since the beginning of time you had historic tax, or is it from 2026 onwards? Does it say clearly?
Everything you hold when you sell it gets taxed as long as you are Cyprus tax resident.
Does it matter where we live? Is it clear? Or is it from 2026 onwards?
I will show you the article, right, which it was published in Greek. I translated it to English. It's a bit boring to read, but I will show you exactly. It's like 5 paragraphs in a whole legislation. No explanations, no clarifications. We are expecting circulars to come up.
I recommend that we do more questions with Orestis later. Then we might have a.
Thank you for the questions. Thank you. So crypto tax losses. Here come more questions. So you bought one Bitcoin in 25 for 73,000. I tried to make it up so that you make a loss on one and a profit on the other. So you bought it for 73. You bought 5 Ether at 1,200 each in 2023, right? What happens to your profits? You sell one Bitcoin today at 63,000 euros. I didn't check the price before I logged in, but it was there yesterday. And then you sell 5 Ether at 1,800 euros each. So what did you do? You made a loss on the Bitcoin because you bought it for 73, you sold it for 63. And then you made a profit on the Ether of 3,000. So minus 10 plus 3 is a loss of 7,000. So the tax you pay is 0. What happens to your losses? They are gone. You do not carry them forward. You cannot use them against losses of another person in your group. If you have group companies, you get a bit more advanced, but if you have a group of companies, you can apply group relief. If one makes a loss, the other makes a profit, you can offset and not pay tax if the group is making overall not a profit but a loss. You cannot do this. And you can only offset them against the profits of the same person.
Any profits?
Same profits of the same person, crypto profits. Or you lose it. Use it or lose it. I'm not going to say questions because I already see the room is cold. Trick question though. What about the crypto tax losses on the disposal of mined assets? Are you allowed to carry those forward?
According to
Yes.
corporate tax rules, probably.
He's on it, corporate tax rules.
Depending if you use the crypto source.
Is it a business or not?
Well, what about mined versus bought? Yes? We said mined gets taxed at 15%. If you make a loss, it's an actual loss of a company for corporate tax purposes, not crypto purposes. Which means your loss gets carried forward for 7 years. So it's not all bad news. Not all. So challenges. This is, most of this you have mentioned anyway, but I'll go through it with you, okay? Keep meticulous accounting of your company or your person. If you are a person, you may be subject to an audit if they are not satisfied with your records for cost or with what you have submitted as a profit or a loss for that year. So individuals are technically not subject to audits, but they can be because this is a separate taxation altogether. Valuations and impairments. This is going to get confusing. Auditors of Cyprus companies will look at some of your crypto assets and say, this is worthless now. I'm going to write it down completely. It goes to 0. With that going to 0, you might lose your cost base. So you should keep a track of your tax cost base outside of accounting. Opt out. This is a big question I've had from day one. Are we allowed to opt out of the 8% tax regime? Can we just say we do not want to be taxed at 8%, we want to be taxed at 15%, and if we are individuals at 20 to 35? Technically, they should say yes because it's a much higher tax rate. But question mark to the authority for that. Crypto income, I have the question. There is nothing about crypto income in the legislation. We assume it is taxed at the normal rates. I have a summary slide on the next one. Past losses, somebody asked about transfer of past tax losses. So what happens to your corporate tax losses on crypto from the past? We don't know, maybe they are eliminated. What happens to your tax rulings? We know they are eliminated. They have made it very clear. For every tax change they have made. FX differences, what happens if I have a foreign exchange difference? I got the question earlier. How is that taxed? We don't know. It should be technically taxed along with the crypto at 8%, but it could be that it gets subject to corporate tax, or does it get taxed altogether? We don't know. What happens if your records are gone? If you have this quite ancient history, what do you do then? I mean, we don't know. So all of these are challenges that I open the floor afterwards to any kind of communication on this. And timeline. So I think this is the second to last slide, I think. So we have no legislation in the past. We heard in a past meetup about badges of trade and how the tax office was looking at it. We heard about capital versus trading income and all these types of calculations. And we had tax rulings, right? Today we have 8% tax. So I call you all to gather your records, talk to your accountant, audit your accounts, make sure you have a good classification for accounting, keep track of your costs, keep track of your mined assets, and find yourself a tax wizard, because you're going to need one. And this is a quick summary of everything we have talked about. I'm not going to read through it, I'll just leave it on as a last slide. I think you can all gather from all this that this is how it's going to look in the end.
Thank you, Maria. That was very, very interesting. I'd like to open the floor if the two of you would like to sit and grab a microphone each and be ready to be abused by a series of elaborate and very complicated questions. But I will try and repeat the question, but there's no extra microphone, so try and speak up. And I'll call it time. So try and squeeze your questions and we'll take them, and don't harass them.
Me?
You have been anointed question maker.
So you mentioned a lot of things except one, which I believe is one of the few, not the only instrument, let's say, that's not taxed, crypto loans. Yeah? So I loan you, let's start easy, yeah, 1 Bitcoin. I loan it to you and you sell it immediately. Your cost is basically, let's say it's 50K, and you sell it immediately, no profit, no tax.
If you have just, so the question is, if I get a loan from you in Bitcoin, so you give me 1 Bitcoin,
correct,
right? But you have not disposed it, you have loaned it to me,
correct.
Okay? And I owe you in exchange
10% per year.
So I have to pay you interest, but not the actual coin.
No,
and
never.
I have to return the coin to you.
Never.
It's not a short, it's basically a loan. Tax ruling. That's what I would do. Just go to the tax office and say, actually,
but there is no.
I was gifted.
Okay, let's say I loan you 100K euros.
Yes.
Is there a tax? Some tax on
No, but the 100K is euros. It's a currency.
Yeah.
It's crypto.
It's the
It's
same
not
thing.
a currency.
Yeah, but
It's
50K.
In this space.
It's 50K, and Bitcoin is the vehicle. It's 50K.
Yes.
And Bitcoin is just the car. It's not because you sell it at 50K as well. There's zero.
Okay, it's a good question. I would go with the tax ruling for sure. I would not even try to get that past the tax office without asking it first. I would get an advanced tax ruling so you could do it as a business model if you wish. I mean, if you lend me your car and I sold it, right? I sold an asset. It's the same story. I sell an asset, right? Whether I own it or not is the question.
Yeah, but there is no tax on a car.
There can be.
On a second hand, no.
Technically, well, classic old cars can appreciate
Yeah,
quite
correct.
fast.
So that comes the same as me loaning to my company.
It's if you exchange the ownership, if you are still the owner of the Bitcoin,
The company.
no, but if you are lending it to me, but you are still the owner, or you hold it as collateral over me, it can be argued that the Bitcoin never changed ownership. But if I sell it, I could not sell it if I did not own it. So there can be no argument, I think. But you could try it.
Sorry, but that's strange. If I loan you USD and you sell it for euros,
I make a forex profit, then I'm taxed on it.
yeah, I know, but like, then the argument that if you don't own the USD, you can't sell it. They're alone. You like,
Because you can short and long financial assets.
Yeah.
This isn't the financial asset. That's the tricky part.
So I understand it right? It is brutto for netto. You cannot reduce expenses.
Under the
For
8%
example,
tax.
It is always, yeah, for the tax.
Yes.
It is brutto for netto, and that's it.
For the 8%, yes. If you are under
8%.
corporate tax,
No reduction.
yes.
Okay, so I think the loan also not possible. It is.
I would definitely check it because there's anyway so many question marks. This is much more advanced than they would probably get a
You
question.
cannot reduce, no?
It-
Gas fees is.
I would expect gas to be deducted, but they are not saying anything about that.
Yeah, because gas fee can be very expensive, you know.
There's a lot of expenses actually. If you hold it under a company, in the same theory that you have rent and you have other expenses in a company, you have expenses of holding these assets. You should be allowed to deduct something, but there it's not clear in the legislation.
This is maybe a bit of a different question, but I'm with my company a bit on the brink where I would like to start accepting payments in Bitcoin. And maybe, so this is a bit more like Bitcoin tech related, but maybe there are people who are well established in that domain. Do you have any recommendations how to take or like to offer customers, business customers in that case, payment in Bitcoin, preferably relatively self-sovereign, like with your own node, with your own PTC Pay server, maybe even with Lightning or something? Does maybe anyone?
I think Orestis from GD.
So this is kind of like Bitcoin, more Bitcoin techie kind of stuff, and rather financial accounting kind of things. But maybe there's someone with a business who's already taking payments in Bitcoin, and I would be curious about their setup.
I cannot answer because I'm not someone who accepts
That's
let's
all right.
say,
No worries.
the payment in a business environment. I can't say that probably Orestis from GD. I mean, this is kind of a business model.
Can you repeat the question because I wasn't able to see?
Yeah, so the question is just, I don't think my customers will pick me up on the offer to pay in Bitcoin. I think I'm going to offer like a slight discount. But I would like to own my invoices. I basically show like different ways of payment, like the fiat way and then also the Bitcoin way, or like a Bitcoin invoice. Yeah, and I'm just starting to think about how to best to set this up. I think like a common approach is there's something like an open source project called PTC Pay server, which you run on your Bitcoin node, so like on a little home server. But I've never done it myself, like running a PTC Pay server or putting Bitcoin payment invoices on my invoices as a ways of payment.
So basically you're looking for an acquisition service for your website.
Yeah, and just curious, maybe someone has
So
a
like
recommendation, yeah, I run a business and we do it this way, that's super epic, but don't do it this way. I know
Like
it's
a
very
Google
niche.
Pay button, like someone could just press.
Exactly, so,
So there is a KD button, KD Pay button.
like that, or
You are looking for decentralized way?
as decentralized as possible. Ideally, like with my own node, but I understand that it's like I run my own node, but not like in a business setting, only for my own transactions, not for receiving payments from customers, like reference number matching, so like my website can check off that a payment arrived, you know, depending on how they paid. I know this is a niche question, and but maybe there's like some.
It is very easiest.
Yeah.
Easy is relevant in this case.
It's easy.
Okay.
Or you can just use a Lightning wallet.
I can add a small note to that. I get paid in crypto and stablecoin. And I've been getting paid in crypto and stablecoin for the last 7 years of my life. But thus far, I convert it to euros and I cash it out. And then in my tax reports, I put the euro amount I earned on the day that I cashed it out. Currently, I only keep track of the price when I cash it out. As I understand it, now I have to keep track of the price twice. Once when I receive it, once when I cash it out. If I cash it out for capital gain, I also get taxed 8% on the gain. Otherwise, I only get taxed on the amount when I receive it. So that's what I'm understanding so far, and that's my business model. Unfortunately, most of the payments I receive are in USDC, so I now have to be careful of my capital gains on a non-forex trade, but technically a crypto gain. That's quite interesting that I learned also today. I don't know if that answers your question, but that's my plan. I will now track both.
Okay, I have one tiny little question. This is more like, I think, tax related. How are tips taxed in Cyprus? Probably they are just part of your income, but they are kind of under the radar. Because I would also, like the next step would be to offer tipping where customers can tip, for example, if they're like Bitcoin eCash, Bitcoin Lightning payment, and then this tip gets spread across like the company to the affiliated people who worked on providing that product. So this is some, I think, pretty difficult, like technical wise, but this is not the question. The question is just, if I have a Cypriot employee and he gets like a Bitcoin payment tip, is this part of the income, or are tips like tax-free, or?
So if you have a Cypriot employee and they get a tip, so if we take a very traditional example, you have a restaurant and then you get a bill and it's 36 euros and you feel very happy and you say, I'll pay you 40, right? Technically, there is no VAT on the tip, but they are trying to get there. So there's no value added tax, 19%, because it's considered over and above. It's not considered a service, it's not considered a good, but technically it is something that they want to tax on the VAT side. And that's where you also have to be careful when you are accepting these payments in crypto. In some cases, VAT could be something to consider. And if you do get tips, I will say quite transparently, ask your accountant to keep those separately or keep them separately in your books, and maybe treat them as taxable where possible. But I guess if you're looking for it in the legislation, you're not going to find it.
Okay, so most people
and especially for crypto,
so most people surely handle that stuff like without paying tax, right? Because I don't want to have my office raided at some point because for enabling tax fraud, because I've been like providing tipping structure in my company to my employees. But you, if I understand correctly, you would generally say there's no like tax. Maybe I should keep it.
I would say those individuals, if they are getting tips, it's up to them to pay the tax.
Yeah.
But if they are your employees and you're already declaring them to social insurance and paying tax on their behalf, that's probably something you should add to their income and pay tax on it. Please.
Can I ask a general question?
General.
Who thought of this tax rule in Cyprus? Actual name, I mean, who is it? Do you know?
Next question. I don't know. We just know. I want to go back just because I thought this might be too detailed, but we're asking the right question. So I want you to look at this slide for a minute. This is the law, right? Doesn't mention anything about crypto income. It does not mention anything past what you see here. What is missing? Sorry?
This is Cyprus.
It doesn't say this is Cyprus, but it might as well. And there's 5 paragraphs, and that's the article translated.
That's it.
That's it. That's the law for crypto assets. What we have seen now is this. So
Okay, so most probably because they had like a timeline to do it, they just rushed it.
no, I think they thought this would be very simple. To be honest, they thought we are creating a completely
that's the
separate tax
problem.
regime for crypto, just like they had the special defense contribution, and we will come out with circulars in due course. This is what we are expecting. That's at least the community. Please.
Thank you both for your presentations. They were very informative and interesting. My question is for Marios. Why do you assume the tax office will follow the IFRS? First of all, do they always follow them? Because
So
I'm not sure that they always
It's a
follow
good
them.
question. The international
And-
financial reporting standards are the standards in which companies prepare their accounts. So far, individuals have never really had to deal with this complicated
But
account
also
system.
for companies, does it mean that they accept for all everything that is in their financial
Yes.
statements as per IFRS, they treat it the same under the tax? Because
This is the
I know
practice.
before it wasn't like that always.
There was, okay, so the practice is what gets reported in your accounts, what your auditor provides you in your financial statements, that is using international financial reporting standards. The tax office considers it equivalent, and so they measure everything in the same way. To keep things, let's say, simple. When it comes to individuals, you have to understand these more complicated cost accounting rules, so you can figure out how to keep track of your cost and sales and so on, so you can pay the 8% tax. I think this was an unintended consequence of kind of 5 lines on a draft legislation.
But the individuals are not required to prepare financial statements unless they earn, like, I don't know, 100,000 or whatever.
There's a limit, they have revised it, it's gone up, but
Yeah.
if they come to you with questions, you have to have answers, right?
But what I'm saying is that that's what we're just trying to figure out now, just thinking out loud, but IFRS don't apply to individuals.
In theory, I would say they should just completely ignore them. In practice, this is what the tax office will look at.
And the other thing is that, in the one sense, IFRS and also the authorities, I guess, they don't consider Bitcoin cash equivalent, but they feel it acts like one, since they made a provision to make sure that transacting and buying stuff with Bitcoin should be mentioned as a trigger for tax. So they assume that it is used a lot. So if it is used a lot, it means that basically it functions as cash. And then you're trying to tax with capital gains, basically, something that acts like cash, which is
It's a very
It's not
good question.
practical.
It's a different view from other countries, from other jurisdictions. But in reality, the way they have viewed this is it's barter. It's just like gold, just like silver, just like any other form that is a proxy to a currency. Those are also taxable. So if you would pay me in gold, I would keep a track of gold. When I sell it, I would make a.
But I will not go to my friend's business there and pay him with gold.
You would pay him in crypto.
I will pay him with Bitcoin because gold is not.
They
cash.
considered it a cash, not a cash equivalent, but a proxy to cash. So they said, look, you have to have a price for it. Is there an available market price? Question mark. Can you value it? Question mark. But they said, look, we will treat it like barter, like an exchange. If I will accept 60,000 euros from you happily as crypto or as euros, then that is barter.
Personally, because I was going through all this, down this rabbit hole of cash and cash equivalence of IFRS, personally I think the definition of Bitcoin not being cash and cash equivalent is wrong. And especially it's gonna show in a few years when you can have a lot of transactions being done in cash, in Bitcoin.
This is
And
what
it's gonna be
we were all expecting, that over the
administrative.
years they will clarify that parts of crypto can meet the cash or the cash equivalence definition, even cash, but they...
I mean, the situation, at least in my mind, is that the cash equivalence is something that comes from, let's say, the central banks of the systems, and it's something else. Everything else, I mean, that is not, let's say, monetized through the financial system.
It's not just that.
It's not cash and cash equivalent, at least for the law.
No,
At least whatever else, except that those things that comes from the system is not cash or cash equivalent. I mean, for the law.
No, I think
Not they use that word.
the IFRS includes other definitions.
Call
that
deposits,
Bitcoin falls.
time deposits, things
Yes, but
fall
cash
into
comes
that.
from
At
the
the end
financial
of the
system.
day, you consider cash to be the Kenyan or Ethiopian
Same question.
legal tender, which is basically no one uses.
But it's what it
And
comes
they
from the
consider it
system.
cash, but you don't consider Bitcoin that is one of the most liquid and is one of the most readily converted into the 5 biggest currencies in the world, 24 hours a day, in huge volumes.
Agree.
And
I think the issue here is that we're applying logic on something that does not have any logic. Maybe we have to also see the political side of it and the power dynamics that the parliament has to go through and examine. So, yes, it doesn't make sense, the taxation doesn't make sense. At the same time, it makes sense when you're trying to hold your monopoly.
it doesn't make sense because they try to pigeonhole Bitcoin, and it can have several uses. And it's like, I think the way at the end they're going to treat maybe in Cyprus is like they treat any gains from currencies, because it's a currency. So if you're a trader and you trade Forex, you get treated your profits under income tax.
Corporate tax or...
Yeah, not capital gains. If
This is
if
why
you don't
they
trade, then you
created
just
it.
hold it, like we were saying with my friend back, if he gets paid in USDC. I mean, if he gets paid in US dollars and the rate increases, he's not going to be taxed because he doesn't trade US dollars. He just bought it and that's it. He's not a professional trader, so no one's going to tax him. So why do it for USDC?
The same argument, which is very valid, your argument, but they are not, let's say, at least as far as I know, they are not seeing it this way. They are bringing it into CARF, they are bringing it into CRS 2.0, and when I say bringing it, I mean crypto assets. So it is in scope, it is reportable, it is an asset, it's technically a financial asset, if I'm reporting it for financial reporting purposes, but I don't call it cash, and I don't call it a financial asset. So with CARF and with CRS 2.0, in theory, the argument should be made to all the authorities that you should recognize equivalents, at least of some of the biggest ones like Bitcoin and Ether, at least, in my view.
Yeah, I agree. This disconnect between reality and practicality and the taxation law will continue to exist as long as there is no representation, parliamentary representation for crypto and Bitcoin in our parliament. Most people there they might understand something, but they also understand their traditional upbringing, let's say, their political traditional upbringing. So for all of this to change, to have more favorable situation, we need people that lobby for Bitcoin, that we need parliamentarians that actually know what Bitcoin is and support it. So until then,
You're right, and for me what they did is very bad because they tried to bring foreign investment in Cyprus and they just basically killed crypto in Cyprus with that because they created a lot of uncertainty. And
Look, in a sense, they created uncertainty, but in a sense, they now brought clarity to how they intend to tax. I mean, it's the first time they are taxing something they don't understand, which is fair enough. It's not money, it's not income, it's not interest, it's not something else. They brought some clarity, at least to themselves, not to us, but to themselves. And I think in due course we will get information through circulars and through various tax updates. And I will be very happy to update you again as soon as we have those. But as far as I understand, it is a commodity, that's how we treat it. If you treat it under IFRS or not, I don't know. But in theory, they will accept the same terms for companies as for individuals. That's what I see. There was a question out in the back.
Yeah. So if a client of the regulated asset manager deposits crypto to the asset manager for portfolio management services, whatever the portfolio manager buys is irrelevant. They might buy real estate, they might buy shares, they might buy credit cards. Is this considered a sale, or is it considered a deposit to their account in another account? And when they withdraw from the portfolio manager, how are you able to combine the two?
This is where the definition that we have been talking about for so long fails, because you are making an investment and you are using crypto to make that investment. You might as well use cash. If you had used cash, you would not make, in theory, a realized profit when you invest. But actually what happens is when you transfer money that is in a different currency than your accounting currency, and for individuals accounting currency would be euro, because we are all tax resident in Cyprus and euro is what the tax office understands. If you had made, let's say, a deposit of $100,000 which you had acquired for the equivalent of, let's say, 90,000 euros, and on the day you deposit it, you remove it from your account, and the equivalent is 100,000 euros instead of 90,000. There is there a profit in euro terms of 10,000. In theory, when you infrequently make these transactions, as described here, the tax office will say this: you're not a trader of foreign exchange. So you made a 10,000 euro profit. We're not going to tax you on it. But when you remove the money from your account, the $100,000 cost actually is equivalent to euros. So if when you acquired it, it was 90,000, and now it's 100, the 10,000 profit is there. It's just a question of if they will tax it or not, and the answer is they will not, because it's a one-off, you don't do it frequently.
Yeah, but what about if you deposit to the
If you did this with the Bitcoin, they would tax you.
100,000 USDT.
They would tax the difference.
Which
If you had 100,000 USDT and your accounting is in euro, when you bought it, the FX rate between euro and USD, which is the proxy for USDT, was 1 or 0.9, as we said before. When you transferred the USDT out, the rate was 1 to 1. You made a profit of 10. They will tax the 10.
But capital gains say
There's no capital gains in crypto. That's the thing.
Yes, but crypto is just really plugin, it's not the way.
I
mean,
conceptually, you are all right.
Because
Because it was not
with the tokenized shares.
Yes.
It's just different vehicles to do the same job.
Yeah.
So I think this is in what they did in the US.
In the US, they took a very pragmatic view because there's very advanced crypto people living there and advising. And also advising the government, but also advising the tax authorities in the right direction to keep a fair game. But what you are saying, if you would take USDT, you record the price in euro on the day you took it. And when you deposit it, you record the same price in euro, and if there is a difference, it's a profit, and you pay 8%.
But I deposited into a client's fund account, which is my account. actually he have done the.
If it's your personal account and it is not changing ownership, there is no change of ownership, there is no sale, no disposal. No
It
nothing.
will be in the asset portfolio, I just put it the asset. Holding the funds on my behalf.
Yeah.
It's still my inverted commas.
In my view, you should not be paying any tax on something like that. It's your money and you are using it.
What about if
It's
the
your
exchanges
crypto.
are not in the EU? Are they still reporting transactions to the EU?
Crypto exchanges not in the EU, are they under CARF or CRS?
Well, it depends on the country, always. So if the country is a part and a member of the OECD, then they're most likely under CARF. However, under CARF, you need to have treaties between countries. It's not like the EU that you just create a law, a directive, and everyone is included. So it would presuppose that first, the third country that you're talking about is a member to the OECD, and second, that there is an international agreement, a treaty between Cyprus and that country for exchanging information for tax authorities, specifically for crypto. So your answer, my answer is depends. Maybe if you have a country in mind, we can.
No, I don't know. That's the question.
I can add to that.
Please.
I was just reading that if the country is not licensed to report, the EU will discourage and at some later point ban an EU citizen to be using that as a platform. So it would be ring-fenced along those that can report, whether they're EU legislated companies or not, and those that cannot, at some point will be banned from using it.
I would like to see them enforce that.
The thing is that as crypto becomes more mainstream, mainstream happens. So you need insurance, and if you're an exchange, you are paying so much insurance on these individuals who are resident in countries where there is no CARF or something like that, because you are taking the risk that maybe it is a high-risk jurisdiction, it's a grey-listed jurisdiction. So the higher the risk, the more the fees, and at some point the insurance cost does not offset the fees you are making, so you just decide, I will not take those clients. And I think this is, I mean, it's becoming like a traditional asset, and traditional asset things are about to come up as well. So,
Any other questions? Also about my presentation.
it was very, I think the combination was great, the CARF and tax. Yeah.
So,
Well, I would like to say that due to a small mix-up with Domino's Pizza, they are delaying. The mix-up is funny. They thought I was pranking them because I purchased too much food. And then they called me, and I put my phone on silent as a very good attendee, put my phone on silent. And because I didn't answer it in time, they didn't deliver it in time, thinking I'd been pranking them. But I have been a customer for 11 years, so maybe they would assume that I'm not pranking them this time around. That being said, the food will arrive by 9:10, and since some of you